Debi Peverill, and you're listening to the weekly tip from Painless Financial Training Group. Today I'm talking about what did we learn during the personal tax season that just ended. So on April 30th, the first part of tax season comes to an end. People who are not reporting self-employment income on their tax return. Everybody else has until June 15th. So we always take a look. I ask the question, what could we do better? What have we learned? And there's things we learn as tax preparers, but of course this tip is about people who pay taxes. And, have you given this any thought as you went through the process? Did you make any vows about how you're not going to have this much trouble next year? Typical things that people could do better is have a place where they keep their charitable donation receipts, a place where they keep their medical deductions. It doesn't have to be a file folder on paper. It can definitely be an electronic thing. A few of my clients realized this year that if they'd kept track of the trips that they took to medical practitioners out of the normal area that they work, they could have made a claim for medical mileage, but they couldn't put that information together in a practical way. Another thing we saw this year were people who usually claim home office expenses, and they claimed them through COVID simply because there was, on so many dollars, so many days deduction available. Now, of course, if you're going to claim employment expenses for your home office, you have to have a T2200 from your employer. And while we wait for that, it slows down your tax return. So those are things that typically people could do better to speed up the income tax return process. So if any of these things apply to you, make a note and take a vow to do better next year.